That would take, let's talk about a snapback in yen if we were to see that.
Oof.
10 big figures. I'm not going to predict, but maybe it's that kind of ginormous move.
3:30 right now on the US 10-year. Kenny Kaminsky of Alpha Simplex joining us up next from London. This is Bloomberg.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Touchdown at Edinburgh Airport, King Charles III. A little bit later this morning after that, he'll have an audience with the Scottish First Minister, Nicola Sturgeon. Tom, before he gets there, I understand there will be an arrival and inspection of the Guard of Honour at the Palace of Holyrood House, Scotland. So that's the next phase of all of this, Tom, as we work our way through to the funeral this time next week.
Many, including in America, will say, what's the why here? The focus on Scotland, besides the Queen's immense affection for her mother, the Queen Mother's heritage of Scotland. And the answer is, all of this is the imagery as King Charles will visit the different parts of the United Kingdom, John, that are separate from England. Britain is not England, is it?
There's another part of this as well, Tom. We have to remember this. As a member of the media, we'd been thinking of what was called Operation London Bridge, and that was for if the late Queen had died here in England, in London, at Buckingham Palace, or perhaps even at Windsor. She, of course, stayed through the summer in Balmoral, the royal family's Scottish holiday home, and that was Operation Unicorn. This was an unexpected development. So all these things you're seeing centred around Scotland as we go through the next phase of bringing the Queen back towards London, Tom, this is why. This was part of this sequence that was unexpected when all this planning has been done. And this planning has been in place for a long, long time.
And the unexpected will be the emotion this morning. Everyone, of course, is covering this worldwide, folks. And on radio and television, Lisa, John, and I are going to try to give you perspective within the market coverage that we do. John, I can't emphasize enough the symbolism that we will see in the next 2 hours from King Charles III moving from the palace up the Royal Mile.
I couldn't agree with you more, Tom. We've got to pick up on some of the price action as well, so allow me to go through some of the equity market movements this morning. And good morning to you all in New York. It's now good afternoon from London. Equity futures up 0.5% on the S&P 500 as we wait for the opening bell in New York City a couple of hours away. Equities elevated, yields lower by a couple of basis points to 329.45. Dollar weakness is a real story today. Euro strength, euro dollar 101.33. That currency pair positive 0.9%. With some single names, we can head over to New York now and catch up with Kriti Gupta. Hey, Kriti.
Yeah, good morning, John. Well, as you were talking about in the kind of sphere of the broader market with that background here, you do have Twitter shares actually lower. One of your underperformers this morning down to the tune of 1%. Remember, they do have that shareholder vote tomorrow as the legal battle with Elon Musk continues. He has for a third time tried to say he needs to withdraw out of the deal. Twitter saying that his claims, well, they are invalid. Nevertheless, those shares down to the tune of 1%. Following cryptocurrencies, though, Riot Blockchain sharing in some of that glory, up about 3% on the day. But to me, I think the real macro story here is going to be railroad strikes. One, they're supposed to start as soon as Friday and could actually increase those supply chain woes across the country. Think Chicago, Kansas City, Fort Worth, Texas. Right now, the assumption here is that Joe Biden, the Labor Transport Secretary Marty Walsh as well, is going to hop in and somehow push them back as they have earlier in his term. Nevertheless, Union Pacific shares and the other railroads, I should say, trading a little bit higher to the tune of almost 2%. Let's get to the other major macro story, and that, of course, is going to be the chip sector. An expectation here in the market that President Biden is actually going to broaden some of the restrictions when it comes to exporting chips to China. He's already tried to do this a little bit when it comes to specific technology. Now he's going to broaden it to other artificial intelligence as well. So on the expectation of that move, you have the likes of NVIDIA, Advanced Micro Devices, and even Intel all up on the day.
Kriti Gupta, thank you so much. Greatly appreciate that. We say good morning to you from London as we look, as John mentioned, of equity markets doing better than good. And maybe it is a second rally off of what we saw in the horror of middle of June. Katie Kaminsky joins now. It's been a joy to speak to her, Chief Research Strategist at Alpha Simplex, about trend, because she, off of Andrew Lowe at MIT, is a slave to trend. Is full disclosure, I am too. Katie, what is the trend now, and is the trend different than what we saw in the last 2 weeks of June?
Yes, I mean, I think we've seen the short bond signals as well as long positioning in dollar be very dominant recently. But in the last 2 weeks, we've really seen an influx of risk-on behavior, a lot of buying pressure, particularly in the equity sector. And this is somewhat of an indication that people are getting optimistic. They're ready to put money back in the market. But the question is going to be, is it too early?
That's the question that Citi's asking. This is what Andrew Hollenhorst and the team had to say this morning. They published just moments ago. I'll read through it. Despite the pricing in of hikes, risk on prevails. The message at Jackson Hole was clear. The Fed will lean against looser financial conditions until inflation has convincingly slowed. The team over at Citi go on to say, meaning the Fed will be incentivized to push against the nascent risk rally. Do you agree with that, Katie?
I do agree with it, but I also think it could take longer than people expect. And the fact that the Fed is remaining steady is they're setting a signal that they're thinking a little differently than the market. And I think we've been the most surprised to see that the market is more optimistic than Fed commentary. And that suggests that there's perhaps maybe a little bit more that we need to think about going forward, and that we might see a little bit of reversion. We'll see what the CPI looks like today, but you're going to have to see how winter unfolds and how we handle some of these energy issues and other problems. We haven't even really seen QT yet. So I think it's going to take time to know, but I'm a little bit less optimistic than the market.
And Katie, John was talking earlier about how we should just interview meteorologists all day, and that might be as good as interviewing prognosticators on the market, because that might be what determines the market. So what is the bond response? What is the stock response to a really cold winter, one in which the energy shortfall becomes more acute?
I mean, this is a serious issue because if you see people dealing with higher interest rates in terms of their payments, and you're also seeing people dealing with higher costs, it could really be a difficult situation, particularly for Europe. And so I think people really need to think about looking at those prices as we roll into the winter season. We're just now starting to move towards December contracts and farther out in the curve. So I do agree with John that, it's really going to depend on how we weather the winter as the price pressure is real.
Katie, we're speaking with you after you got a 38% gain in Alpha Simplex's main fund as a result of selling short bonds, something that hasn't worked for years. At what point do you double down on that short position at a time where you think the market's getting it wrong and underestimating the Fed's resolve?
So I think one thing to know about trend following is what we do is follow trends. And the truth is that the market, particularly in really difficult environments, is often a better bastion of information than one individual or any one particular view. And so what we've seen now, which is kind of why I'm saying it's surprising, is that short bond trends are still there. That positioning is still very strong in the data. And we could definitely see, even though rates are reasonable, them becoming more unreasonable in the short term.
Can you correlate short bond price down, yield up into an equity bet on trend?
Yes, I mean, once we see that things have leveled out, I think I've always said that this isn't an equity story, it's a bond story. So once we see that bonds have stabilized and we have a much more healthy curve and more of a risk premium out in the curve, so we see much more of a steeper curve, I would think that that's really sort of a risk-on signal that we can all start to think about those premiums as opposed to the potential destruction of rate rises. Because we all forget, even though it's better going forward, the bonds we own now really take a hit. And we all felt that this year.
Katie, let's go mathy here. We're doing this on a Monday. We can go math Monday here as well. Is the disinversion of the curve important, or is it the first derivative rate of change of said disinversion?
For me, it's much more the inversion of the curve that's going to matter. I mean, that tells us something about the disparity between what we're thinking about short-term rates and long-term rates. And if you look empirically at signals in terms of trend and direction of bonds, you see that bonds have tended to fall when the curve is more inverted. And thus, if we continue to see that inversion signal, we're going to see that there's some sort of bearish view on bonds until we can kind of see that longer-term risk premium, that steepness, really be an issue. So I'd say first derivative.
Katie Kaminsky, thank you, over at Alpha Simplex on the latest in the bond market, built on a conversation we had with Bob Miller of BlackRock about 10, 15 minutes or so ago. Bob Miller, Lisa, very keen to point out the Bank of Japan. And I brought up the fact, and a lot of people would go along with this, I'm sure, that the two anchors around the global bond market for the last at least 10 years has been the ECB and the BOJ, both with QE and negative rates, deeply negative interest rates over in Japan, weighing down yields. We're unwinding that process at the ECB, first with a rather large rate hike in the last week or so. QT could be the next step. What we're all waiting to see happen is whether the BOJ is the next to capitulate here, because they're running not just very low interest rates, but also keeping a cap on yields in the JGB market.
Over the weekend, a number of Japanese officials came out and raised concerns once again on the yen and the devaluation they have seen and the concern about importing the wrong kind of inflation. At what point do some of the voices get together and kind of pressure to become a scenario, just like you say, where they have to abandon that cap?
Johnny, outcome here. You can do it off the Bloomberg very quickly on a weekly chart. Dollar yen, if you get a push to -2 standard deviations, strong yen is 16 big figures.
Do you find it interesting that on a day where everything else is really rallying hard against the US dollar, the euro, sterling, that the yen is doing nothing? Dollar yen's unchanged at 142.55.
Yeah,
I mean, it is what it is. It's just, it's there.
It is euro stronger, yen not helping out. A euro yen at 144.46 shows that. But to me, it's a little bit of noise waiting for Tuesday's U.S. inflation report.
It's CPI Tuesday.
It's in CPI Tuesday.
CPI Tuesday, Lisa, just around the
in
corner.
London.
Well, look, right now, the Japanese yen is not correlated in the same way because they are not playing by the same playbook that everybody else is. So at what point do they decide to play along at a time when they are basically facing off the same inflationary pressures that everybody else is? And frankly, an energy shortage, as some people say, is pretty significant as well.
Vasily Serebrikov of UBS is going to weigh in on some of this stuff in about 5 minutes or so. We're also going to keep following King Charles III, who we understand has touched down in Edinburgh. He will disembark the plane very, very shortly and make his way, Tom, to an audience with the First Minister.
And a walk up the Royal Mile.
A little bit later, yes. Lisa?
I was just going to do a mea culpa. I said Edinburgh before, and it's Edinburgh. I just keep thinking, you know, it's these things happen.
And there's the King right now, King Charles III, touching down in Edinburgh, Scotland. From London, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia hit power plants deep behind Ukrainian lines today, causing blackouts across the northeast of the country. Ukraine says more than 30 settlements have suffered Russian missile and airstrikes over the past day. At least 2 power plants were reportedly hit with precision rockets. Meanwhile, Ukrainian troops are continuing to advance in an offensive that has reversed months of Moscow's advances. The UK economy recovered more slowly than expected from a slump triggered by an extra public holiday in June. The 0.2% expansion followed a 0.6% decline in June when gross domestic product was curtailed by an extra day off to mark Queen Elizabeth II's Jubilee. Economists had expected growth of 0.3%. Authorities are stepping up efforts to deliver food, tents, and other supplies to Pakistan. The country is grappling with food shortages after deadly floods devastated the impoverished country. Nearly 1,400 people have died in the flooding. More than 30 million people have been displaced, and 90% of the nation's crops have been destroyed. Deere is investing billions of dollars to expand into software to make its farming machinery more productive. The Wall Street Journal reports the company will introduce self-driving tractors and sprayers that distinguish weeds from crops this year. Deere projects that 10% of its annual revenue will come from fees for using software. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them, and so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value, and the kind of transparency that they want.
Are you seeing a labor shortage right now, and what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
The Fed actually wants the dollar to be relatively firm because a stronger dollar restrains economic activity and it reduces inflation because it reduces the cost of imports into the United States. So the Fed is not unhappy with the dollar strength. This is just part and parcel, one aspect of how you tighten financial conditions.
Well, the dollar's weaker today, not stronger. That was Bill Dudley, the Bloomberg opinion and former New York Fed president. From London, good afternoon with Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Here's the price action for you. In the equity market, the bounce continues, up 21, call it 22 points higher on the S&P 500, up 0.5%. It yields lower by 3 basis points to 327.74. The dollar a whole lot weaker against the euro and against sterling. Euro stronger by 1 full percentage point. Euro dollar 101.38. The King Charles III just touching down at Edinburgh Airport, now making his way for an inspection of the Guard of Honour at the Palace of Holyrood House in Scotland, Tom. He should arrive there in the next 30 minutes or so. And then an hour later, something deeply, deeply emotional for us all to witness, Tom. An hour later, the King will walk behind the Queen's coffin from Holyrood House to St. Giles's Cathedral.
With his two brothers and sisters scheduled, and of course we saw the Princess Royale over the weekend with the Queen's coffin into Edinburgh. But I would suggest, John, that all the symbolism here of the moment begins with, I believe, a meeting with Miss Sturgeon near the Scottish Parliament, which is just across from the palace, and we hope to bring that to you as we see it.
A little bit later this afternoon. As I say then, to kick off the trading week, equities firmer, Tom, yields pretty stable, and a dollar a whole lot weaker.
Vasily Sherebnikov joins us right now with UBS in FX and macro strategy as we try to frame a picture of where we are. And because of the moment, Vasily, I think I need to start with the symbolism and the signals that we see in pound sterling. If we move beyond this period of mourning, if we move beyond a new King Charles III touring his domain, what will be the challenges to sterling? What are the domestic political challenges that can move pound sterling?
Yeah, I think the domestic political challenges are pretty clear, and I think they've been largely outlined by the Bank of England in some of the recent communications. I mean, it really is the risk of a deeper downturn. I think from the currency perspective, that could mean that, inflation remains relatively high, but growth falters. That's a fairly negative combination for a currency, obviously. But to some extent, as important as domestic issues clearly are for the UK, I think it's in the same boat as the euro in the sense that energy prices and the energy crisis have really been, in our mind and in our models, kind of the dominant driver here. So the reason I think you're seeing some reprieve for sterling and also the euro today also has a lot to do with natural gas prices coming off some of the pretty extreme levels that we've seen over several weeks. They're certainly nowhere near normal, but it's been a little bit of a correction there, and I think that's helping sterling. And frankly, I think that's where we're going to continue to focus going forward.
Where is the opportunity right now? I mean, we have the confusion of a Fed meeting. We've got a Bank of England meeting right beyond it. But on a global basis for UBS, where's the foreign exchange opportunity end of September?
Look, I think that in terms of some of the more recessionary trades, if you want, right? Because I think it's still very clear that the global economy is in a very weak phase. We think the dollar-yen starting to look fairly misaligned, and I know there's been sort of a lot of talk around over the past week. I think it's becoming increasingly difficult to justify current levels of dollar-yen, even with U.S. rates. So that means we're in this kind of overshoot zone that to some extent is testing the resolve of Japanese policymakers. That being said, I think it really depends on U.S. inflation as well, right? So we expect a fairly soft, by recent standards at least, CPI print tomorrow, and I think that could be kind of the initial impulse for some further correction in dollar-yen. But I think, as you pointed out earlier, it's interesting that the U.S. dollar is weaker, but not against the yen today. And that seems to be kind of at odds a little bit, I think, with the current economic backdrop. So I think that's maybe one where we think things are fairly misaligned in the near term.
Vasily, are you saying that you are long the yen, that you think that it is going to strengthen versus the dollar here, regardless of whether the Bank of Japan abandons its peg, abandons its yield curve control?
There could be sort of several paths to the same outcome, right? I mean, I think that there's, if you think about the broad range of scenarios, it's possible that global inflation continues to push higher and BOJ does nothing. I think that's a possibility, and that's kind of the world we've been in. But the two other scenarios, I think, lead you to a stronger yen. That is, either global inflation continues to push higher, and finally BOJ caves in, right? And we're starting to see a little bit of noise in that direction. Or we're going to see finally U.S. inflation moderating kind of more prominently, and they're kind of some of the impulse for dollar-yen highs being removed naturally, right, from the U.S. side of the equation. So it seems to us that it's affects markets overshoot. That's what they tend to do. But the argument for dollar-yen much higher, buying dollar-yen at 143 or 144, seems to be relying purely, we would say, on momentum at this point, rather than any kind of plausible evolution, either in U.S. rates or sort of Japanese policy.
Vasily, I've got 60 seconds, and I want to squeeze this in and just return to the euro story. The sequence, the logic behind the move today is essentially progress from Ukraine, in Ukraine, against Russia, means gas prices lower, euro stronger. Do you question the logic behind that sequence from one to the other?
I'm not sure this was just the situation in Ukraine, right? I mean, I think to some extent, if you look at gas storage levels and things like that, they have been above sort of, ahead of schedule for some time, right? So I think markets just simply took note of that. No, I think the euro actually has been very efficient in capturing some of those developments. So it more or less trades where it should be based on those natural gas prices where they're today. I would agree with you in a sense that we're not out of the woods, right? This crisis is by no means over, which means it's probably not the time to buy the euro quite yet.
101.45. Vasily, thank you. Vasily Serebryakov there of UBS. Talked a lot about the weakness in the dollar, also the rally in risk assets. Silly expecting Chairman Powell to lean against that. Here's some feedback for you, Bramo. That's the problem. Lean. Jerome needs to show up at the next FOMC with a hawk on his shoulder, a full body hawk tattoo and a mohawk, and instead of taking questions, screech like a hawk for an hour and a half.
That's brilliant. I love that. Honestly, that's kind of genius. I think maybe he'll take that up under consideration.
I'm not sure Chairman Powell's going to arrive in quite that fashion, but it's amazing that only a few weeks after we had that address in Jackson Hole that already people are questioning their resolve.
My favorite part about it is he could not have been clearer. And then other speakers, including Lael Brainerd, came out, could not have been clearer. We are hawkish, we are hawkish, we are hawkish, we are hawkish. And people are saying, but are you hawkish?
We'll all look at the data tomorrow. CPI, the main event for markets, just around the corner. You're on board with that now, aren't you?
No, not
CPI,
really.
well,
But,
you're doing it. You're branding it. CPI Tuesday. There we go. From London, David Riley's coming up from Blue Bay Asset Management. This is Bloomberg Surveillance.
Should we anticipate that you will have regulations clarifying what the SEC is going to do on cryptocurrencies and related kinds of things in the near future?
It's pretty clear that many of these tokens may be securities. What we've asked the trading platforms, the lending platforms, the other various venues to come in, to work with us, to get registered under the securities laws, because if a platform has 50 or some of them 500 tokens on their platform, probabilities are they're not all non-securities.
Now, there's another issue that has arisen, which is called gamification, which is to say people are making a game out of trying to buy stocks. Are you worried about this phenomenon?
We live in the 2020s in a new digital age where applications on our phones can use massive amount of data and then predict our behavior. What do we do when the digital algorithms are maximizing for the company's revenues rather than our returns? And so we're trying to think that through. It's not just gamification, it's a little bit more than that. It's whether there's a conflict between the app and our investment returns.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays.
The ECB's mandate, the ECB's merit is quite clear, and that is about inflation.
Fiscal stimulus from the UK, more fiscal stimulus coming across Europe is going to make their job harder, right? They need to continue to be
diligent on rates staying high in order to stave off inflation.
Fiscal response are going to play into inflation going forward.
The Fed is not unhappy with the dollar strength. This is just part and parcel, one aspect of how you tighten financial conditions.
It's a new economy, it's a new normal, and it needs a different type of analysis in order to adjust.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Witnessing history, a seamless transition of power from Queen to King, from mother to son. From London, good afternoon to you all. This is Bloomberg Surveillance on TV and radio, alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. TK, moments ago, King Charles III touching down in Edinburgh, Scotland, and on his way to Holyrood House.
One of the things to do, John, here is to look back in history. This is at the bottom of the Royal Mile in the Scottish Parliament, and of course the acclaimed palace going well back to Charles I, his coronation there at the demolished abbey right now that's just adjacent to the palace, is a symbolism in the place of Scottish independence. And if you go back, John, to August of this year, there was a different dialogue between Sturgeon of Scotland and the London politics.
And he will have an audience with the Scotland's First Minister, Nicola Sturgeon, a little bit later on. Lisa, from there, the arrival, I understand, at Holyrood House taking place in the next 20 minutes or so. There'll be an inspection of the Guard of Honour. And then there's that very emotional walk that's set to take place behind the Queen's coffin on its way to St. Giles's Cathedral.
Yeah, it's going to be incredibly somber and needs to strike the right tone at a time when there still is trying to be this unity. And I think that that's the important thing, a unity of the United Kingdom at a time when there is so much change in so many different places.
The thing for us today, and I believe over the next week, we are a witness to history, a momentous occasion for the history of this nation, and I would argue for the rest of the world looking on as well. But Tom, as you've mentioned several times today, the problems that these global leaders have to deal with, they may well pause and reflect this Monday as they descend on the capital a week from today. But after that, they've got to grapple with the same problems. There has been one good piece of news, I think one really important development over the weekend: Ukraine's progress in its war against Russia.
And the war experts saying that it was a huge, it's the most significant weekend since April, if not back to the February 24th invasion by Russia. We've had some good follow-up on that, good conversation this morning here. But John, I would suggest it dovetails into, as Lisa mentioned earlier, natural gas prices ebb away, oil ebbs away.
Dollar weaker.
Possibly good news into October.
The euro stronger, sterling stronger. Some big moves in FX today, Lisa.
Yeah, really driven from this feeling of relief, and perhaps it has to do with the Ukrainian developments over the weekend, but perhaps it also has to do with the fact that natural gas has been declining pretty steadily over the past few weeks. At what point, though, is this just noise as we head into the winter and we keep having to double down on this idea that what will determine a softer landing or a very hard one will be the weather and whether we get a cold winter?
Well, for the ECB, never mind the staff forecasts, and we're all still talking about those staff forecasts of a week ago.
No recession.
No recession, and the baseline for the ECB, when I think the baseline for many people is not whether we get a recession, it's how deep it would ultimately be. But the severity of what's about to take place on the continent, Tom, will come down to how cold this winter will be.
Yeah, the weather, yes, I agree with that, but I think just as important off of September 21 as September 22. And let me ask you a question, John, frankly, I haven't asked in the blur of the moment. Is the United Kingdom in recession?
At the moment, most people would say no. In the future, possibly.
That's
I would
the
say
guess.
one thing that's changed the calculation in the last week is just massive fiscal intervention from this Prime Minister.
Which
that has
keeps
changed
you
the
away
outlook.
from recession.
You would hope so. But Lisa, regardless of the new cap from this Prime Minister and the willingness to take on unlimited liability to cover the cost of these bills now are much, much higher than they were a year ago. And people have still got to grapple with that reality.
And you're seeing that borne out in the data. Earlier this morning in the United Kingdom, we did get GDP figures, and they showed the UK stagnating. And so at what point is a tipping point not that difficult to see, given the pressure that people feel with a potential double-digit inflation rate for a longer period of time?
To interrupt here quickly, a distant shot, John, as the King enters Edinburgh of the castle, and then he will descend down to Holyrood House. But just, you know, again, the history here is just stunning. We don't need to do a history lesson of the moment, but this is an original moment, I would suggest, for the United Kingdom.
It's something many of us have never seen before, Tom, and something some of us will possibly never see again.
You think of the economics that we cover every single day. The sterling at the coronation of the Queen was, I believe, $2.80, and we come down with the challenges.
Of course, you checked that, of course.
I checked that as well, and I was sort of surprised. I thought it was actually a higher statistic, but to see the challenges that are to be faced, which we will cover with our great team, and I really commend you folks. Bloomberg UK is an extraordinary effort here to be up to date on these set of crises, and that's the issue. It's not one crisis. It's not, I'd say it's starkly different from the United States. It's a set of crises.
Of all these challenges, of which there are many, there was one crisis, Tom, that was on the horizon that we all hoped to avoid, and that was in the FX market. And I reflected on this a little bit earlier this morning, and I think we should do it again. The very fact that we were having a little look at 113 and didn't break 114, and now this morning, this afternoon here in London, we're back to 117 levels. The meeting for the Bank of England governor, which was set to be this week and is now next week, was always going to be difficult, hard, and complex. The very fact, though, sterling has rallied back, I think, for the governor of this Bank of England, that is a positive development, relatively speaking, to what we were looking at just a week or so ago.
Yeah, it's a bounce, and I'm not going to play technical analysis here, but certainly it's cutting the right way for a new prime minister. We have to remember she's been out of the picture here for a few days. We have a new prime minister of the United Kingdom.
We do.
That's been underplayed, I think, here in London.
Lisa's been on top of that as well. The problems of this prime minister, Lisa, front and centre. I mean, for the British public, of course, we're all following this at the moment. But to Tom's point, we've still got an energy crisis. We've still got a lot of problems to work through, and they don't go away.
And we got news earlier this morning that October 1st was when some of that aid was going to get starting to get distributed to UK households for consumers. So what does that mean? We don't know necessarily for businesses, but to get that through during a period now where, out of respect for the Queen's memory, they are not doing deliberations is going to be quite a feat.
We'll continue to follow King Charles III as he makes his way to Holyrood House, Scotland, the Palace of Holyrood House. From there, Tom, of course, he'll move us on to St. Giles Cathedral, a deeply emotional walk which is set to take place in the next hour or so, walking behind the Queen's coffin from the Palace of Holyrood House to St. Giles's Cathedral, Tom. Just the next phase in a long sequence of events that's set to take place as we work our way towards this time next week, where we have the funeral for the Queen.
It's a path forward, but for the family, this is different. Balmoral is owned by the royal family. It is different than the other castles, and I would suggest their Scotland is different. And again, what we'll see here, and I will save the history here for when we actually observe these events, but they are steeling themselves for significant symbolism, which goes back beyond Charles I in roughly 1620.
Tom, I opened the show and I said that what we're witnessing here is a seamless transition of power from Queen to King, from mother to son, from mother to son.
We forget that. And William's, same thing in the last 12 hours.
We'll continue to follow these pictures as they come in from Scotland for you. We also need to follow the developments in this market with equity futures bouncing back. Sterling a whole lot stronger, the dollar a whole lot weaker. I reflected on this a little bit earlier this morning. The very fact that we've got all this dollar weakness and still the yen is struggling to find some strength. I think we can turn to David Riley, the Chief Investment Strategist at Blue Bay Asset Management. David, can we start with foreign exchange and work our way to your world? What do you make of the dollar weakness this morning?
Yeah, I think some of the weakness that we're seeing in the dollar is reflecting, both the repricing of the rates outlook for the euro after last week's ECB meeting, and I think also some sort of, a little bit of sort of slither of optimism in terms of recession risk, including for Europe, because I think you've been discussing the UK, but one aspect about the UK is this huge fiscal package. We know there's discussions going on in Brussels about an energy price measures as well. And so I think kind of a little bit sort of thinking, well, somewhat higher rates, maybe the worst case scenario in terms of a severe downturn in Europe is less likely, and other things being equal, I think that's kind of broadly supported for, the euro to some extent for sterling. As you say, yen is the standout in that respect.
David, I've been dying to talk to you with your holistic knowledge of the gilt market. We see a new king shaking hands in Scotland and all the news to come on the fiscal solution that Lisa Abramowitz talks about. Can the United Kingdom withstand this fiscal impulse?
I mean, the United Kingdom can certainly, I think, finance that without having a sort of, outright, if you like, sort of funding crisis. But I do think that it does imply that longer end gilt yields will be higher. I do think it actually, something which won't be welcomed by the new Prime Minister, I do think if you're the old lady of Threadneedle Street, then you are also looking at this package and saying, other things being equal, it implies higher Bank of England base rates. So, the UK and the UK government will be able to finance this package, but I think it's going to have to pay a price for it. And I think ultimately there's going to be higher yields. And I think, I'd still be relatively bearish on sterling.
David, what do you need to see from the plan that evidently is going to leave consumers with some aid from the UK government as soon as October 1st? What do you need to see to assess the path forward for how high yields could really go?
Well, I think the first thing is we actually still don't have an official costing for the plan that was announced, obviously, on the day that we got the very sad news about the passing of Queen Elizabeth. We actually don't have the numbers. I mean, there's estimates floating around ranging from 100 billion British pounds up to 150 billion plus, but we still don't know really the details of the plan and ultimately in terms of the costing. So I think that's going to be important in terms of working out what the path for gilts will be, and also then obviously the Bank of England and the Bank of England reaction function. I think one of the themes that's starting to come through, not just from the UK but also transferring to Europe, is that we are starting to now see the emergence of a kind of fiscal put, if you like, in terms of growth. But I think that's clearly, I think, broadly positive, but it does mean, I think, that it implies that we're kind of deferring high inflation or keeping high inflation for longer, and I think that then fits into the theme that actually rates stay higher for longer as well.
David Riley, thank you, of Blue Bay Asset Management. David, thank you very much. Tom, continuing to follow King Charles III as he makes his way to Holyrood House.
In practice here, for what is presumed to be after the funeral on Monday, which is a tour of his Great Britain, it'll be fascinating to see how, we've talked about this on Friday, the shift from prince to king, but also the shift in moving to the grind, the royal grind of duties, and part of that is to visit Wales, visit Scotland, maybe visit Northern Ireland. I'm not sure on that.
The four nations of this United Kingdom, and Lisa ultimately worked to unite a country that for many are grieving the loss of their queen. There will be a deeply emotional scene taking place in an hour, expected to take place in an hour, Lisa, when we see the king walk behind the queen's coffin from Holyrood House to St. Giles's Cathedral.
She wasn't just the queen of the United Kingdom. She was the queen for a commonwealth that may not ever have a monarchy again, if you look at some of the discussion.
Future's positive this afternoon from London. This is Bloomberg.
To name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city, it's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight, with replays all weekend on Bloomberg Television and Radio. Wall Street prepares for the latest read on inflation.
Things are moving. The news flow is extraordinary.
Will headline inflation continue to ease?
The totality of the data has been better than expected.
Very positive movement on inflation.
Instant reaction on Bloomberg surveillance.
This is a new era, and it is one of the most pressing concerns facing us.
And what it means for the Fed.
This inflation fever is breaking and economies keep softening.
They are on track, perhaps, for that soft landing.
Inflation in focus tomorrow on Bloomberg.
I think it's very difficult to be the head of a central bank right now because you're fighting an inflation that is partly from energy and partly from psychology, and you're fighting growth that's falling because of it. So to be raising rates aggressively into falling growth and energy you can't control means credit spreads should have a premium, and as you said, more debt on the heels of it.
They don't have the premium that Brian Weinstein and Morgan Stanley would like to see, that's for sure. From London this afternoon, good afternoon to you. Here's the state of things right now in markets, particularly looking at stateside, where equity futures are positive by around about 0.4% on the S&P 500. 1 hour and 12 minutes away from the opening bow, with equities up, yields lower by 4 basis points to 326.59, a dollar that's weaker, euro stronger, 101.48 on euro, dollar positive 1 full percentage point. All ahead, Tom, and this time tomorrow we'll be counting down to CPI.
24 hours and 11 minutes away from
inflation.
what matters.
All about inflation.
Which is more important to you, John, a headline or core, quickly?
A core, month on month.
Yeah, I think the core
month on month core, what happens here is going to dictate.
Even some people modeling a decline.
They want to see a convincing, sustained decline in inflation over time, which gives them confidence that we're heading back towards 2% inflation. And you heard from Governor Waller last week, who's not convinced of that right now.
We welcome all of you on Bloomberg Radio and Bloomberg Television. An extraordinary Monday of history in Scotland, of war in Ukraine, and of course what we're seeing in the markets. Right now we turn to Ukraine. It's been an absolutely unique weekend of infantry movement, which means only we can speak with General Hodges. Ben Hodges is a former commanding general for U.S. Army Europe. He is a Pershing Chair in Strategic Studies at CEPA, but so importantly, Ben Hodges, I'm going to go back to you doing what you do best. You were an instructor at the United States Army Infantry School. When you instruct infantry, and particularly if they're Ukrainians going after rapidly retreating Russians, What should they do?
Three things. Number one, do not let up the pressure. Do not give the Russians a chance to stop and turn around and fight. So that's number one. Number two, keep using your combined arms. In other words, infantry, tanks, artillery, engineers, all of these things working together. That's what Ukraine is doing so well, and that the Russians have not done well. And then finally, unleash Ukrainian air power. Even though the Russians had all the advantages, they've never been able to dominate the airspace over Ukraine, and I think the Ukrainians are going to try and take advantage of that.
This conversation reminds me of one U.S. grant, an unknown, going down the Mississippi River and teaching the North how to prosecute a full-force invasion. What do we need from the Ukrainians now to be like Grant in our Civil War? Is it simply they need more material?
Well, for sure, they have the same sort of strategic eye as General Grant did. This is about you have to crush your enemy. And that's from President Zelensky on down. He said this thing started with Crimea and it's going to end with Crimea. And so what they do need from us, of course, two things. One, they need continued delivery of the type of weapons and ammunition that are helping them make the difference to destroy Russian logistics, destroy Russian command and control. But also the sanctions. The sanctions really are having an effect on Russia's ability, both in terms of their own defense industry, but also domestically. I think more and more Russian people are beginning to feel this war that Putin was trying to shield from them.
Well, Lieutenant General, that's where I wanted to go, because there is some discussion about the possibility of conscription if Vladimir Putin does not want to come to the table, does not want to come to some sort of resolution. If he is running out of troops, as the reports have suggested, what is Vladimir Putin's response to this? How concerned are you about some retaliatory measure that we're perhaps not expecting?
Well, you're right that they have a very serious manpower problem in the Russian military, which doesn't sound like what I would have said a year ago. Most of their recruits now, many of them are conscripts, come from way outside of Moscow and St. Petersburg. The Kremlin has tried to avoid drafting anybody from the two major metropolitan areas because, again, they want to shield the public from what's happening in Ukraine. Nobody wants to fight. Nobody wants to get involved in this war. They know what's going to happen if they do get sent into Ukraine. So I think part of the reason President Putin has avoided doing this general mobilization is because he wants to preserve the fairy tale, but also they'll be humiliated. People will not show up. They don't have the equipment to equip. They don't have the uniforms and weapons to equip another 100,000 troops. And it would still be months before they would be effective in any way.
So, Lieutenant General, how does this end? And does it reassert Russia as a member of the global economy, or does it leave it incredibly isolated?
I think it's going to be a long time before we can look at Russia and work with them as if things are quasi-normal. This will end, I believe, early next year. The Ukrainians are going to push the Russians back to the 23 February line before the end of this year, I believe. Of course, I could be proven wrong here in another month or two, but that's how I think that's going to happen. And then Crimea, probably early sometime next year, a combination of fighting and perhaps some negotiated conclusion. But the Ukrainians are not going to stop, nor should they stop. What does Russia look like when this is over? Of course, I cannot for sure what kind of friction and things are happening inside the Kremlin. We're all seeing various reports of things that are happening there, a lot of finger pointing, and people may start falling out of windows again. I mean, it's going to be a pretty rough scene around Moscow, I think, for the next few months.
General, thank you. We appreciate your time today, sir. Ben Hodges there, the former commanding general for the U.S. Army. Lisa, even if it does conclude next year, and I know the General would agree with this sentiment that forecasting geopolitics about as difficult as forecasting anything right now. I think the only thing that makes you look more foolish is trying to call the oil price anytime soon, or gas prices for that matter. Gas is down today. The euro's stronger. There's plenty of reasons for that. But when you think about the durability of a move like this one, even if you've got a conclusion to this war, I keep going back to these sanctions and the policy response to it. That's not going to get unwound immediately or at all.
Which is the reason why I asked Ben Hodges, former lieutenant governor, commander, whether we would see some sort of return of Russia back onto the international stage. Because if you don't, does anything change with the energy backdrop, even if the war technically ends?
The gas prices are changing today. They're down almost 9%. The euro changing too. It's a whole lot stronger. Futures just about positive. We're fading though as we get closer towards the opening bell. Equity futures are positive 1/3 of 1% after being a fair bit higher than that a little bit earlier in the session. Euro dollar positive 1 full percentage point, 101.48. Joining us shortly, Stephanie Aronson of Brookings from London. This is Bloomberg.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
A landmark climate bill passes through Congress. The expansion of nuclear energy and more investment for companies at the forefront of the fight against climate change. In this episode of Bloomberg Green, we'll explore President Biden's climate bill.
I almost think there's no superlatives that capture the breadth and scope and scale of this law.
Find out what's actually in it and where it doesn't go far enough.
The thing that's not included here is a specific hard cap on CO2 emissions or a specific legislated goal.
And look at what more needs to be done to invest in modernizing and greening U.S. infrastructure.
What we haven't had is a plan that's realistic, time-bound, pragmatic.
I'm Kayleigh Lyons from Bloomberg's World Headquarters in New York, and don't miss this week's edition of Bloomberg Green, airing this weekend on Bloomberg TV, Quick Take, and online.
Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
This afternoon from London, good afternoon to you all as we count you down to the opening bell in New York City. Good morning to those of you waiting for that, about an hour away, with equity futures positive on the S&P 500. Yields are stable to lower through much of this morning in the bond market on the 10-year. Yields have been climbing for 6 consecutive weeks. They're lower today by 3 or 4 basis points to 327.36. The euro is stronger, the dollar's weaker, 101.40. Some of the reason for that, Lisa, and you and I have been going over that through much of this morning and into the afternoon here in London, is just the connection from the stories, the news we hear over the weekend about progress being made by Ukrainian forces against Russian forces, the pullback that we've seen in gas. And one thing you and I are both on the same page on, that it's not the war per se alone, exclusively, that has caused this move in gas and energy. It's the response to the war. It's the policy. So it's the potential for a change in policy that we need to focus on more than anything. And Dan Tannenbaum, a good friend of this program over the years and sanctions expert, said this, Lisa, just moments ago, pinged me a message. These sanctions won't go away for years.
And it's going to take years to come up with the alternative. The European Union is still discussing what their energy plan is going to be, an emergency energy plan. Earlier this morning, we were hearing from EU officials that they are going to have a mandatory power demand cut. So they're going to be trying to target this from both sides. But this is not going to be clear-cut, and it's not clear to see an easy read-through to a currency response at this time, regardless of the developments on the ground.
Tom, gas prices down about 9%
They're down
this afternoon.
I did a technical study of the Netherlands, and I'm going to say they're down, but they don't signify any sense of a downward trend. Have we broken some form of technical level? I don't see it, but I defer to Javier Blas and, Stuart Wallace and all of our hydrocarbons.
So we were down about 7% this morning. We're now down about 9%. Yeah. Last week, down 3.5%. The week before that, down about 36%. Yeah. So we've had a steady drop-off over the last 2 and a bit weeks.
But boy, what a moonshot it was before.
I mean, the chart's still vertical, and we can pull up the chart, look at it.
But I would suggest that the pricing that we've seen is this faith in the Ukrainian advance against Russia. It's that simple.
Yes, but to Dan Tannenbaum's point, it's the sanctions and the policy response to the war that matter here. And even if we have a conclusion to this war, and I think we all hope we have a conclusion to this war, in the minds of many, Tom, the sanctions aren't going to go away for a long, long time. So can we actually resolve some of these issues in the energy market?
General Hodge is just telling us the sanctions work. Others disagree.
Sure.
We have to see. It's that simple. Futures up 13, Dow futures up 42. This morning we welcome all of you. Stephanie Aronson with us, economist at the Brookings Institution. As we look at the state of the American economy, as we look towards this inflation report, but also just the general mix of the American economy. Stephanie, how complex is the American economy now versus what we see in Europe? It seems to be more successful, quieter, maybe with a better plan forward than what we see in the tumult of Europe.
I think it's true that the situation in Europe is much more complicated, although there are certainly spillovers from the war in Ukraine to the U.S. economy. Our energy markets are just less affected than they are. And also there are a lot of direct spillovers of the war, too, in Europe in the form of the refugee crisis. So I think there is just much more tumult now in Europe. And while it's certainly spilling over to the U.S. economy, it's just a less complicated situation.
I will suggest, Stephanie, that Brookings owns a high ground on the research of the effect of inflation and the effect of slowdown across deciles and quintiles of America. It's unevenly distributed. Everyone tells us that. But how bad is it unevenly distributed? How much is the middle class of America getting crushed right now?
I mean, lower income and middle income Americans spend a lot more of their budget on things like food and gas. And one thing that's really been striking in the past year is how much these prices have risen. So the effects are much larger for them.
Stephanie, can you tell us about Jackson Hole and your takeaway from Jackson Hole, and how surprised you were by how hawkish some of these central bank participants actually are? Because it's only a few weeks later that market participants are coming on this program and questioning the credibility of those institutions and their resolve to do what they have told us they're going to do.
Yes, I think that the Fed and other central banks were clearly trying to send a signal to their publics that they were on the case of inflation and that this was their main priority now, even potentially at the expense of there being significant slowdowns or recessions in the economy. And I think part of it was a response to the movements we had seen in the markets leading up to Jackson Hole, where there seemed to be some sense that perhaps the Fed and other central banks wouldn't act as aggressively. And I think clearly now, they have sent the signal that they are going after inflation first and foremost.
Which raises an interesting question, Stephanie, at a time when we're expecting a CPI print that will potentially be softer, maybe even negative, at least in the headline number, albeit the core is expected to continue to rise, but you're seeing gasoline prices come off. You're seeing even certain retail companies put their clothing on sales. You're seeing a lot of movement toward lower prices ahead. How does the Fed respond? Do they remain hawkish in the face of progress, even though a lot of people are seeing it continue to accelerate in certain sectors?
Yeah, I think so clearly the step down in oil and gas prices is very welcome, and that is probably going to depress the headline number, or as you said, it could even decline. But I think there is a lot of momentum still in the core. We're expecting, for instance, housing prices to be very persistently high and other sectors as well. And so I think that this one reading is not going to be enough to dissuade the Fed from a large movement at its next meeting, even if it is a bit softer than the numbers had been coming in recently.
What are you watching, Stephanie, to really gauge how quickly inflation is coming down? We know that used car prices have declined. We know that gasoline prices have declined, although that's questionable whether it will stick once the Strategic Petroleum Reserve is no longer being deployed. At what point are you looking at other stickier measures like rent and some of the other areas to really be your guide?
I think clearly looking at some of the other sectors, what's happening in rents, as I mentioned, also what's happening in good prices is going to be key for monitoring inflation going forward. And I'm also looking at the labor market, because the Fed is going to need to see a real slowdown in the labor market. We've made a little progress on that front, but the 3-month moving average of payroll employment growth is still above 300,000. That's a big number. And so I think we really are going to need to see that slowing down further before the Fed can feel comfortable that they're going to be able to achieve their target.
Stephanie, your wheelhouse here is the study of labor participation. We see cultural, institutional. We see it by male, female over 30, 40, 50 years. The dynamic of labor participation now, what does that signal about two Americas out there, an employable America and a less employable America?
I think you've hit on a very important factor going forward that, obviously some of the decline in labor force participation we've seen in, over the past decade really is just sort of the natural result of the aging population. But there actually has also been a decline in the labor force participation of sort of prime age men 25 to 54, who we would really expect to be working right now. And a lot of that decline has taken place among lower skilled men. And I think it does speak to the very difficult labor market that these men face. And that's going to be a long-term structural problem that the U.S. is going to have to deal with.
Stephanie, great to catch up. And again, fantastic to see you over in Jackson Hole, Wyoming. Thanks for being with us. Stephanie Aronson there of the Brookings Institution. Lisa, we went back and forth on this after we caught up with those Fed officials in Jackson Hole. They're forecasting higher unemployment. They're forecasting some pain in this labor market. And they can talk up higher rates and lower inflation all they like. Once you start to see materially higher unemployment, a deceleration of growth accompanied with that, there's going to be a lot of questions about this policy, a lot more than the questions they've already had.
There's a political question, too, because right now, a lot of politicians are saying inflation's the foremost concern, and so they're fine with a Federal Reserve that's hawkish. But what happens when you do start to see that deceleration? To your point, how much resolve can they have, especially considering that this is uncharted territory?
The language of the White House, Tom, so far has been that we will give space to the Federal Reserve to do what they need to do to bring down inflation. Now, when unemployment starts to shift in the other direction, I wonder if that's going to be in the statement for the weeks and months to come.
I think the message has changed from 4, 5, 6 months ago, and that the space is occurring right now. Shock because of the data, which shows how important tomorrow's data is into September 21.
I guess the good news for this Federal Reserve, and I stress the good news for the Federal Reserve and not good news per se, is that unemployment was climbing, at least in the last jobs report, off the back of higher participation, which led to softer wages. I'm not sure anyone's jumping on that particular data point with conviction and saying that's going to be the trend for the next several months, but maybe that's the opening for this Federal Reserve to start talking up a so-called, can I say it, soft landing?
You can say it, whatever that means. I mean, honestly, what does that mean?
This is a transitory comment, but you can say
I'm not sure.
It's a, no,
Does that mean no recession? Does that just mean that the unemployment rate doesn't rise? The theory is, in a perfect scenario, there are all these people on the sidelines from the labor market that are going to come back. That participation rate will go up, and suddenly wages will get a little bit softer in terms of how high they climb, and everyone will be happy because the unemployment rate, people won't be laid off in the same kind of way.
I thought about this morning. This is important. X number of months ago, what percentage of the punditry was calling for a recession? It was a lot.
Tom,
has it occurred?
At the end of the year, and I often go back to the summary of economic projections in December of 2021, and we'll get another set of forecasts at this Fed meeting in a couple of weeks' time. They were looking for 0.9% on Fed funds by year end this year.
Yeah.
That was the forecast at the end of December for the year ahead. And we're talking about a 75 basis point hike in a single meeting again. Lisa, now that's a change.
I love the way that you do this.
Change.
You're basically just showing that their forecasts can be treated with that in mind.
Really?
I'm just putting it out there and letting people make
selling you need to watch and listen to Bloomberg Surveillance.
Futures up 4/10 from London. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. King Charles III is vowing to uphold parliamentary democracy and follow what he called the selfless duty of his mother, Queen Elizabeth II. Addressing Parliament today, the king said he felt, quote, the weight of history surround him. Charles is now in Scotland, where he'll lead a procession carrying the Queen's coffin through Edinburgh. The Queen will be laid to rest 1 week from today. The euro surged the most in 6 months after a European central bank policymaker said further interest rate hikes may be needed. Traders are betting U.S. inflation data later this week could undermine the need for aggressive tightening in the U.S. The ECB raised its key rate by an unprecedented 75 basis points last week to curb the fastest pace of consumer price growth on record. ARK Investment Management's Kathy Wood is warning about the risks of U.S. auto debt if there's a drop in prices. In a Twitter post, she said the prevalence of ride-hailing services means that people won't prioritize paying car loans as they did during the 2008-2009 financial crisis. The used car market is showing signs of softening after prices skyrocketed during the pandemic. Twitter is saying no to Elon Musk's latest effort to cancel his agreement to buy the social network. Twitter says Musk's latest move is, quote, invalid and wrongful. That's according to a filing today. The billionaire says the company's treatment of a whistleblower gave him another reason to walk away from his $44 billion deal. It's his third attempt to withdraw his offer. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When, you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
What we've had so far is a willingness by governments across Europe to accommodate the shock from rising energy prices. With rising interest rates, it's going to be increasingly problematic for these governments to maintain this kind of fiscal policy.
Gilles Mowaker there, the chief economist at AXA Investment Managers. We are about 42 minutes away from the opening bell in New York City. Equity futures are positive on the S&P 500. Just about 4,100 on my screen right now. Looking at S&P 500 futures, up 16 points, up 0.4%. Yields are lower by 2 or 3 basis points, 328.31. Tom, euro dollar. Look at that, positive 1%, 101.41. Stronger euro, weaker dollar.
Modest leg up here, and you see it much more in stronger euro versus yen dynamics with stronger euro today. We have a chart in New York on a Monday. Here is Kriti Gupta.
Well, Tom, we have to talk about the power crisis. I wanted to put in some perspective for our TV and radio audience here, which brings me to my chart of the day. We're looking at German and French power prices going back about 2 years. So you see this kind of big move in 2021, it abates, and then a more parabolic move in 2022, which once again is coming back down from its peak that you saw in the late end of August, still at record highs though. And I really want to put this into perspective once again. Electricity prices largely linked to gas prices because all of the sources of energy, well, they bid into the same grid, and of course gas prices are the more expensive source, so they tend to drive the market. For the American tourists, I'll put it into some perspective though. Here's what it means for you. The Eiffel Tower, their lights are going to turn off earlier. The London Tube, for example, they're experiencing severe delays because of these power supply issues. Tom, this is going to be a key story about whether or not these power prices ever come down, simply as they deal with the issues that come with gas prices and, of course, renewable energy.
Kriti Gupta, thank you so much. Greatly appreciate it. There's some terrific journalism today at Bloomberg News. on oil, on hydrocarbons, on all that it means for us. And of course, leading that coverage is Will Kennedy, our managing editor for energy and commodities, who we're thrilled to join in London today. Thank you to all of our London team for what you've done the last number of weeks and months, Will. It's just been huge value in New York for us. Today, I got a double barrel. No surprise that Javier Blas is out guns blaring, but also David Fickling writes as well on the unintended consequences Mr. Putin may have unleashed. Let's cover that concept right now. As you sum away all of our coverage, what are the unintended consequences right now in oil?
Well, clearly, Putin has made energy part of his campaign in Ukraine and part of putting pressure on the West in not supporting Ukraine. It hasn't worked so far. But in the short term, in energy terms, it has been working. As Kriti explained there, it's causing huge economic pain for European countries as they pay unprecedented prices for their power and gas. The point that David's making is, how long will that work for and what comes next? And what comes next is a continent that says, right, we have to find a way to live without your gas, Mr. Putin. We have to try something new. So the point he's making, and he's drawing a comparison with the Arab embargo in the early 70s, is ultimately the winners from this are not likely to be Moscow, even if it works in the short term. Longer term, it's the other suppliers of both gas from elsewhere in the world and new forms of energy who are going to win from this crisis.
This is such a hard issue to get your arms around, Will, not only because of all the forecasting error that's inherent in this process, but just gauging what's going on the ground, whether there is sufficient stockpiles in Germany to manage through a cold winter. We've heard a lot of varying reports on how well prepared Europe really is. What's your sense of that, just heading in based on where we are right now?
In terms of stockpiles, Germany is ahead of where it wanted to be. I think the current number is 88% full. It's only mid-September. That looks pretty good. But as we discussed last week, it's going to be the second half of the winter, which is problematic. Once those stockpiles are run down, it's going to be hard to secure the gas supply they need. We say it again and again, but I'd reiterate it. Weather will matter here. But it's interesting what's happened to the price. It's come down. It's still very elevated, but it's come down from the extreme levels we saw at August. And I think that's a sign that policymakers are starting to get serious in addressing this question, and that's taken some of the extreme heat out of the market. It's all going to depend on the weather.
In the UK, I wonder how you'd respond to this, Will. It seems like they're almost incentivizing demand with the plan they unveiled last week. How's this going to work out?
I think that's a really interesting point, John. You've got a big contrast between the European plan, where we've been reporting more details right now, which has a very specific targets for demand reduction. There is no target, apart from a few warm words, for demand reduction in the UK. So you're saying this is a fixed price, and it is high. People will respond at the margin. It's not cheap energy, but there's no strategy to bring demand down in a serious way. It's an interesting contrast between Britain and Europe.
Completely unfair question, but it's unfair. Much of the United Kingdom public is oblivious to the high price of hydrocarbons. Is it a razor-thin, rich margin? Or is it a good percentage of the people?
I think it's something that everyone knows about, to be honest, Tom. It's been a matter of huge interest the last few months. In the past, it wasn't something that people thought about much. Energy was relatively cheap. We were probably paying on average about £1,000 a year. Even at the levels that Truss is proposing, you're talking about a 2.5 times increase. That's something that gets almost everyone's attention, to be honest.
Will Kennedy, thank you. And I think we all noticed a little bit earlier this morning, Lisa, a plan for the consumer. We've got a date for that. We're still ironing out the details for businesses, and that's going to be a huge concern when you hear the reports you're hearing out of Germany over the last few weeks that some parts of industries are just shutting down. They're just shutting down.
Yeah, and what does this mean for industries and companies that are trying to reshore a lot of the production at a time when their currency is losing power on the global stage? In other words, how do you deal with the inflationary inputs of having to import more if your industry gets shut down because they don't have enough energy to keep going at the same kind of tilt?
And that's the better news today. Commodities soften. You've seen the likes of sterling stronger.
Yeah.
117 TK a little bit earlier on cable. That's a turnaround from where we were a week ago.
Yeah, I think turnaround's the right phrase. I'm not willing to say, technical bottoms of that. I'll leave that to other people. But, John, what I would notice, besides the real yield hitting a 0.90, which is stunning, now a positive 0.86, 86 basis points, is also the Bloomberg Financial Index has not given way to more restriction. It's not gone to where Jerome Powell would like it to be.
Market-based inflation expectations have just done this, Bramo.
Yeah.
rolled over.
Yeah, which really raises this issue, right? People feel like the Fed, the ECB can get inflation under control, or at least they will get the cooperation of oil and gas, but they might not have to inflict the same kind of pain that they're saying that they will probably inflict on the economy. I mean, this is just an interesting dynamic with the market not fully buying.
Well, I'm going to give credit to Claudia Sam. I may be wrong on this, but someone was writing about the anchor frayed, the rope of the anchor, the inflation anchor frayed. I'm not sure how frayed it is. I don't have a handle on that.
Chairman Powell, when he interrupted ECB President Christine Lagarde's news conference last week, he went on and on about that repeatedly.
He could do that the day following. Maybe the governor of England will speak the day before.
Would you like to compete with the governor of the Bank of England? Get up early and do that too. Still don't understand what that was last week.
Well, how much is this really? I mean, in fairness, how much is it his fault and how much is it the Cato Institute for not necessarily being
Chairman Powell on line one, he'd like to move his panel to an hour later. What's the Cato Institute going to say? Unfortunately, we can't accommodate him this year. Perhaps we'll do something in 12 months.
They'll say that my son-in-law was the one who interrupted your press conference about
If you don't turn
Bitcoin.
up at 9, we'll interrupt yours.
Exactly.
Not sure that's what happened at all. Equity futures are positive on the S&P. The opening bell is about 35 minutes away. From London, this is Bloomberg.
Stronger that moment that you're lifting the barbell. You get stronger as your body is making repairs, making recovery. Recovery is a when and how you get fitter, faster, stronger.
Recovery technology includes everything from massage guns and foam rollers to compression boots, hyperbaric chambers, cryo chambers, infrared saunas, and even infrared pajamas. And athletes are partnering to become investors to take those products mainstream.
When you look at tech in sports right now, it's completely innovating the way training's going, completely changing the way recovery's going. I think sky's the limit as far as where it can go.
But while some of these products can feel amazing, it can be difficult to differentiate between what really helps the body and what just tricks the mind.
Every time you're chasing the latest, greatest, newest tool, you're probably chasing a mirage.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
You will put a woman on Mars. You will bring forth global cooling. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays. This is an extended edition of Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Equity market rallying going into the opening bell. Equity futures positive. Live from London for our audience worldwide. This is Bloomberg alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Futures positive. Got to say, TK, going into this opening bell, we wake up Monday with a better tone to this market.
Better tone of the market, and it's coming off of certainly good news out of Ukraine, Russia. Ukraine doing much better, but far more, John, it's about a quiescent inflation guesstimate forward. I put guesstimate on it because as we go to tomorrow's inflation report, there's a real mystery to it.
Lisa, a better tone in this equity market, better tone in Europe too. Wow. Gas prices down, sterling stronger, euro much stronger.
And a sense that there is some sort of plan formulating in Europe with respect to how to diminish some of the demand, how to bring gas and oil prices down ahead of a winter that really relies as much on the weather as it does anything else.
Our team coverage here at Bloomberg starts right now with Anne-Marie Hordern in Washington, D.C. and Maria Tadeo over in Brussels. Maria, I want to come first to you. The progress that we're told that Ukraine is making over the weekend, your thoughts?
Well, it is significant. It does show that this is an army that can be competitive if they have the weapons. Those who said that Ukraine could not keep up a fight or could not put up a fight have been proven wrong. I think the real question now is, can it be sustained? And yesterday, the president of Ukraine, Volodymyr Zelensky, put out a post on Telegram, which to me was so telling. He said, at this stage, we'd rather not have electricity, we'd rather not have food, not have heating, but get rid of the Russians that are in our land. And he continued to say there will be a liberation of all of our territories. So really a lot of this does show the spirit that this nation has. And I have to tell you, Jonathan, a lot of the Ukrainian officials too that I speak with on the record, but also behind the scenes, they also tell me, you have to understand this is the fight for our lives. This is an existential question for us. So for them, there is no question that the fight will continue as long as they get the weapons they need. I think now for the Europeans, and this is a real question, is whether or not they'll supply those weapons, because as you know very well, there have been concerns, particularly where putting weapons and pumping this country with weapons could lead to escalation.
Anne-Marie, this brings a question about what the U.S. is doing about it, and we've been talking about this for a number of weeks now. How much are you looking to the U.S. when it comes to price caps for Russia, as was proposed on Friday, at a time when the EU is also taking the lead on how to direct some of the energy policy?
Yeah, I think when you look at what's going on between the United States and Europe, and as well as what is still coming out of Russia in terms of energy exports, you really need to differentiate between natural gas, which is one story, which Europe was tremendously relying on in terms of pipeline natural gas from Russia, which over the summer we did have the U.S. surpass that pipeline natural gas in terms of liquefied natural gas going to Europe. And then the other, when it comes to a price cap globally, is really the oil situation. And this is the one that the U.S. is keenly focused on because, of course, the oil price around the world will infiltrate down to what everyday consumers are paying at the gasoline pump. So that is why they want to get, and they have the G7 on board, they're going to implement this plan, but it's also making sure others fall into line, even if they are not signing on the dotted line, that they are going to sign up for a price cap. What you are hearing from the administration, we heard from the Deputy Treasury Secretary over the weekend talking about the fact that this is still one part of the Russian economy that has been able to actually grow, and that is the oil industry. So they want to make sure Russian oil stays on the market, but it's capped at a price. And in order to get access to this European insurance and shipping, you're going to have to get in line. That's the message.
Anne-Marie, how does the news over the weekend of a much better Ukraine military effort, Anne-Marie, how does that change the debate, the urgency at the Pentagon and on the Hill?
I think the debate maintains that they need to continue supplying and helping Ukraine, because what does that say, the fact that Ukraine is able to push back? You have this statement over the weekend when I saw the Russian Defense Ministry pop up with this statement on my Telegram channel saying that they are, quote, regrouping. Maria was correct before saying that this is a rare admission from Russia, from the Kremlin, from the military, saying that they do need to regroup. But the concern now is, What does this mean? What we see Putin has when he starts to lose some strength is that he digs in. And the worry, of course, and the concern is that he will come back harder. So that would almost extend the debate in the United States to actually potentially more support is going to be needed. And that's what the White House is asking for in terms of Congress, in terms of funds, so that the Pentagon could draw down some of these stockpiles and send them over to Ukraine.
MH, thank you. Anne-Marie in D.C., Maria Tadeo over in Brussels. Bank of America just published moments ago on retail sales here in America off the back of what's happening with gasoline prices. They say the following: total card spending was up 5% year over year in August. We forecast a solid 0.8% increase in core control group retail sales. The plunge in gas prices supported spending, Tom, in other categories. So that's some good news out there, at least.
This is just channeling what I'm talking about. 70% of the economy. We've got all sorts of people. Jim Glassman at J.P. Morgan is heated in his 50 years of coverage of the street that we are underestimating the consumption surge in America.
Jim Bianco joins us right now. Jim Bianco of Bianco Research. Jim, fantastic to catch up with you, sir. What do you make of this pullback in commodities? Gasoline in America, nat gas here in Europe.
Yeah, I think it's part of the cycle that these markets go through. I mean, if you take nat gas in Europe, it got a little overdone a couple of weeks ago. And while it's definitely pulled back a lot, this is the old Wall Street thing. Are we more impressed that it's 40 or 50% off the high, or are we worried that it's still 400 or 500% off of the low from 2 years ago? I'm more worried that it's 400 or 500% off of the low. Regarding gasoline or crude oil in the United States, count me in the camp that thinks that market is deeply oversold right now. The pessimism is running high. Everybody seems to want to talk about $70 crude oil as opposed to a rebound to $100 crude oil. At least that's the way that I see it. And I think we're setting up a low.
You think that we're setting up a low to a new high? Is that what you're suggesting? I mean, there's sort of, just based on what John was reading earlier about the Bank of America card data, it's almost this unfortunate cycle that if you get lower gasoline prices, you get more spending, and then you get a faster economy, and then you get an economy that needs a Fed to really halt the brakes. So at what point are you looking for that surge in demand to take back over in the crude market?
Oh, I think that this surge in demand is going to take over immediately. I agree with that survey. You know, you've already had a $1.20 decline in the price of gasoline. And it's also worthy of note that tomorrow is the CPI report. The Bloomberg estimate is minus 0.1% because of the fall in gasoline prices. But that has not stopped the market from putting a 90% chance that the Fed is going to raise rates 75 basis points. So if we print minus 0.1 tomorrow, still expect 75 basis points. We need to have something more than that. Actually, I think we're probably going to turn our attention now to the core CPI measures, because those are what's going to matter. And that spending surge will probably show up in core. And that's really where the Fed and everybody will pivot to as far as where they're going to go next with Fed policy and what's next for inflation.
Jim, we're in London, and we've been hearing a lot about an energy situation that's quickly moving and looks marginally better. Perhaps not when you look at the pace off the base, but when you look at, for example, just the trend of natural gas prices coming down, how concerned are you about the fiscal landscape with countries looking to borrow to plug the gap, but not necessarily reduce the demand? And I'm talking about the United Kingdom.
No, I am very concerned about that. There's two things here. First of all, while the price of natural gas is coming down, the storage for natural gas is about where you would have expected it to be in the middle of September. So there's no lack of storage. But the price that they've paid to get that storage is about 600% more than they did last year or 2 years ago. Somebody's got a huge bill they've got to pay. So that's either going to show up in higher energy bills or it's going to show up in higher taxes. And if they think that they're going to bridge that gap with more borrowing, well, you're going to do it at a time, let's take the UK, when the Bank of England is aggressive on raising rates, is not going to be there to support the market if there's going to be a big jump in fiscal borrowing. And it's going to be very, very difficult for that. So it looks like they've either got higher taxes or higher energy bills or a combination of the two.
Jim Bianco, I want to steal from the great John Writing with his Bank of England and Federal Reserve experience. Why are we afraid of higher interest rates? Aren't higher interest rates a sign of a resilient economic America?
Interest rates can go up for one of two reasons. If they're going up because of strong economic growth, real growth, that's a good thing, and you want to encourage higher interest rates. If they're going up because of inflation and to ward off higher inflation, that is a worrisome thing. And it's been the latter. It's been inflation that's been driving it.
Fair.
Now, if we ever
Yes.
pivoted to the point where we're talking about booming economic growth, which we are not, we've just had 2 negative GDP quarters, then we could talk about higher interest rates being good, but that's not the case now.
Right. Okay, but that's beautifully explained, Jim. It's a clinic. But the bottom line, Jim Bianco, is somewhere on the inflation continuum, we flip over to that good news. Is that at a 5-ish, 4% inflation rate, or do we got to get down to Chairman Powell's 2.6%?
Well, if you believe the chairman, it's going to be probably closer to 2.6, and we're probably going to have to see a lot more evidence that inflation has peaked other than gasoline prices have fallen for the last 2 months. Don't get me wrong, that's great that they have, but that's just not going to be enough to move the needle when it comes to the Fed, in my opinion.
Hey, Jim, you're going to stick with us. We're lucky to have you with us going into the opening bell there. Jim Bianco there of Bianco Research. I want to get you some movers going into the opening bell as well. I believe we've got those movers with Abby. Hey, Abby. No Abigail Doolittle, I'm afraid, although I was given direction that Abby might be there, Tom, so that's unfortunate. Coming up around the opening bell, Seema Shah, Chief Strategist of Principal Global Investors. I imagine
She
Seema
emailed
Shah
me.
is ready to go.
Abby emailed me like an hour and a half ago, and she said, are you coming out of triple leveraged all cash? And I said, no, I just can't do it today. So maybe
You think Abby's doing some work?
She's popping on margin there right now?
I wonder if Seema Shah's doing some work on this equity market as well. In about 20 minutes, you'll have some stunning pictures coming out of Scotland, Tom, as the King Charles III, makes his way from Holyrood House over to St Giles Cathedral, walking behind the Queen's coffin. Tom, deeply emotional scenes that are set to take place in Scotland
And at,
in about 20
the
minutes.
minimum, John, this is back to the Stuarts of Charles I and Charles II and the uproar of the 17th century. But quite frankly, I'm no expert in it, but it goes back, John, much, much further in the royal history. This from Holyrood House up the Royal Mile. We can talk about that as we see those images, and we'll bring them to you on Bloomberg Radio as well. But I just really can't say enough about the choreography here as the coffin of the Queen moves to London.
Lisa?
Yeah, honestly, this has been a regime change, and it comes at the precipice of a massive shift in a lot of different aspects throughout Europe. And so we're watching sort of a historical representation of a changing of the guards on multiple fronts, and it is incredibly emotional for a lot of people.
Got a lift in this equity market as well, so we've got to carry two things at once and cover two things at once. So let's pick up on the price action for you and look at the equity market stateside. On the S&P 500 futures pushing higher on the S&P, yields pushing lower on a 10-year yield. Talked a lot about the 10-year in America, yields higher for the last 6 weeks or so. Equity futures taking shape as follows, up 0.4 on the NASDAQ, on the S&P up 0.5%. The bond market on 2s, 10s and 30s looks a little something like this after climbing for 6 consecutive weeks on a 10-year yield. It's a bit lower, Tom, by 3 or 4 basis points.
Dow futures up 76, nowhere near 33,000.
You're just doing
John,
that
but
to wind
we
me
have
up.
to note that. Well, yeah, I think the Dow futures are germane this morning. I wouldn't...
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers, and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We are seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco.
It's every municipal bond investor's dream. A bright, shining city on a hill. A place where there won't be any economic, financial, or political problems. So you never worry about getting your principal and interest paid on time. But what if the city you've chosen doesn't live up to that dream? That's why investors turn to Assured Guarantee. We have a long history, a proven track record, and a wealth of financial resources. So if something does go wrong, we'll make it right. Assured Guarantee, a stronger bond.
GCM Mining operates one of the world's top 5 highest-grade mines and pays a monthly dividend. With a PEA for its new gold project, GCM is poised to grow through diversification. GCM Mining.
The world is so much more complicated than a labyrinth. It's really interesting to look at that image of a maze as this place to tether myself to make sense of the world.
And do you think that there is perhaps a cautionary tale, something that you want to say about modern society?
When I'm inside of the corridors of a maze, I can feel really lost. It can be kind of relaxing. It can be kind of calming.
Hyundai Motor, connecting art and technology.
The markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short-term.
Bloomberg Markets, The Close. Weekdays on Bloomberg. Wall Street prepares for the latest read on inflation.
Things are moving. The news flow is extraordinary.
Will headline inflation continue to ease?
The totality of the data has been better than expected.
Very positive movement on inflation.
Instant reaction on Bloomberg surveillance.
It's a new era, and it is one of the most pressing concerns facing us.
And what it means for the Fed.
This inflation fever is breaking and economies keep softening.
They are on track, perhaps, for that soft landing.
Inflation in focus tomorrow on Bloomberg.
My lords and members of the House of Commons, we gather today in remembrance of the remarkable span of the Queen's dedicated service to her nations and peoples. She set an example of selfless duty, which, with God's help and your counsels, I am resolved faithfully to follow.
Guy Johnson joining us from London now on the latest. Guy, some deeply emotional pictures, scenes set to take place in Scotland just moments away.
Yes, at 25 past, John, you will see the Queen's body moving up the Royal Mile to St Giles. It will have a royal escort. As you say, this is a deeply emotional moment. The Royal Mile is effectively lined with crowds. You can start to see the start of that process now, and it will ultimately lead towards a service of remembrance that will take place at around 3 o'clock this afternoon. So that's taking place. As we heard just a few moments ago, the King has already spoken to both houses of Parliament, just reiterating what we've already heard in terms of his commitment to uphold the Constitution and continue what his mother started. Much of this, John, televised for the first time. When we saw the coronation of the Queen, that was the first time that had been televised. Much of this process, we've never seen this before as the general population, but now most of this is being televised. We get an insight into how the process unfolds and what goes on behind the scenes.
Guy Johnson, we have 4 children, the oldest and the youngest 16 years apart. It sounds like any family out there as well. Tell us how these 4 children behind their mother's coffin, how they are perceived separately in England.
One is the King. That is how he is perceived. That is a very clear line. And the rest, I think now will play a very different role. There is going to be a slimmed down royal family, Tom. That is the direction of travel. Certainly the King has spoken about this in the past. You are going to see a much bigger focus, for instance, on the new Prince of Wales, his family. That is where the focus is going to be. Everybody else will become increasingly peripheral, I think.
Guy Johnson, thank you, out of London. Guy, many people have echoed those comments over the last week or so. When we get more on these pictures in just a moment, we'll continue to follow some of that for you as we work our way towards next week, next Monday, when we have that funeral service for the late Queen. Jim Bianco of Bianco Research is back with us. Jim, we talked a lot this morning about how the problems for many of these leaders, many of these political leaders, aren't going to go away. They may well pause this time next week for a moment, but the problems will still be there.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one, and through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Taken the unprecedented step last month of predicting a recession would start in the fourth quarter. I don't believe any G7 central bank has ever predicted a recession. They always tell us we're going to have a soft landing, and then when we have a recession, they announce it's over. But this is one where they said a recession is coming, but that's not even stopping them from raising rates. So it looks like higher interest rates across the board.
They've suggested a recession. It's not as if Bank of England, yes. European Central Bank has not taken that step. The Federal Reserve of the United States has not taken the step. The Bank of England has been sort of the outlier with respect to a good degree of, perhaps some would say, honesty. I am wondering, though, Jim, what this read-through is. If you get higher yields in the Euro area and in the United Kingdom on the heels of this two-pronged whammy, what does that mean for the U.S. Treasury market? Does that bring up some of the yields in the long end?
I think it does. I think it does. As global rates go up, there'll be enormous pressure on interest rates to move higher in the U.S. And I think as the Federal Reserve continues to raise rates, that'll even put higher pressure on the long end of the curve. The terminal funds rate, according to the Fed Fund futures contract, is 4%. That seems to be the number everybody's focused on. All the rate hike cycles back to 1987, the 2-year note ends or peaks above the terminal rate. So if that history holds, you're going to get at least a 4% 2-year note, if not much higher. And that would mean that we're either looking at a record inverted yield curve of minus 75 basis points or 50 basis points, or what I think will happen is that the long end will be dragged higher too. And I don't think that June might have been the high of the year, but will come at a minimum, will come very close to matching that yield or maybe slightly taking that out before the end of the year.
It's an interesting call at the end there. Hey, Jim, it's good to hear from you. Jim Bianco there of Bianco Research on the bond market and President Lagarde.
John, if you and I said that, we would be so time out.
Just repeating what Jim said.
I know. It wasn't us, folks.
I've heard him say that before. Well, I think it raises the question also, Lisa. They talk about front loading.
Yeah.
Other people would just say this is late.
Right, exactly.
This is scrambling.
Oh, I like that. I like that. I haven't heard that. Late loading.
Well, they're loading it at a time when you're already heading into a recession, so it doesn't give them a lot of leeway. We heard Isabel Schnabel just a moment ago reiterating this idea that they're going to hike rates more.
She sounds very hawkish, doesn't she?
They all sound hawkish. The market still doesn't want to see hawks.
Equity futures up 0.5%. Was that on the edge of being philosophical? They want to see hawks.
I was just still thinking of your image.
I'm 21. What are?
The hawk
of
on
him
the
with a hawk on his shoulder.
with a tattoo of a hawk on his left arm.
The opening bell up next. This is Bloomberg.
Countdown to the opening bell is brought to you by Crypto.com, the world's fastest growing crypto app.
Do you know how much your broker charges on margin loans? On a $100,000 margin loan, Interactive Brokers charges just 3.83%. Fidelity and Schwab charge over 2 times as much. E-Trade and TD Ameritrade are even higher. Move your account to Interactive Brokers and
A landmark climate bill passes through Congress. The expansion of nuclear energy and more investment for companies at the forefront of the fight against climate change. In this episode of Bloomberg Green, we'll explore President Biden's climate bill.
I almost think there's no superlatives that capture the breadth and scope and scale of this law.
Find out what's actually in it and where it doesn't go far enough.
The thing that's not included here is a specific hard cap on CO2 emissions or a specific legislated goal.
And look at what more needs to be done to invest in modernizing and greening U.S. infrastructure.
What we haven't had is a plan that's realistic, time-bound, pragmatic.
I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and don't miss this week's edition of Bloomberg Green, airing this weekend on Bloomberg TV, Quick Take, and online.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio. The top names at the Fed are on Bloomberg.
It is
is essential we get inflation down. People want jobs, but they also want low and stable inflation. We have to give them both.
Nobody covers the Fed like Bloomberg, your global business authority.
This season, Sling has the channel lineup to channel your college football. So you can catch the Hail Marys, witness every miracle, see the big games and the bowl games for less. Channel your football with Sling TV.
The opening bell just around the corner, seconds away. Equity futures positive, 0.5% on the S&P.
Nice lift.
On the Nasdaq 100, up 0.5% also. In the bond market, switch at the board, yields look like this. 6 consecutive weeks of yields higher. Today, lower by 2 or 3 basis points, 328.31. And as you can see right now, dollar weakness, the big story. Euro strength, euro dollar back to 101, 101.24, positive 0.8%. With your movers around the opening bell, I'm very pleased to say that joining us now is Abby. Hey, Abby.
Hey, John. Well, we do, of course, have that S&P 500 higher, as you were mentioning, and we're seeing something we haven't seen since early July. 4 up days in a row. So you, Tom, and Lisa have all been talking about this rebound that we're having. It is sustained. A big piece of it, Apple, up 1.3% over the last 2 days, up more than 3%. This on positive pre-order data for that iPhone 14. Not only that, but it's really showing a shift toward the higher price Pro. Plus, they may not have raised prices, but they're holding pricing, high pricing, even given inflation. Occidental Petroleum up with oil higher, sharply higher, up about 1.3%. But of course, also on the news, or the known news, that Warren Buffett's Berkshire Hathaway has a 20.2% stake and also has the ability to take that as high as 50%. Bristol Myers Squibb up 7.4%. Their oral psoriasis drug was approved by the FDA. So a binary event producing a binary jump. And then finally, Disney, well higher than its pre-market highs, up 1.3%. Activist investor Dan Loeb, as you know, yesterday on Twitter, saying that he's giving up the push to remove ESPN from Disney. It's, of course, one of their crown jewels, a big piece of the numbers. So Disney today up 1.3%, John.
Abby, thank you. 3 days of gains on the S&P becomes 4. The S&P 500 up 0.6%. The Nasdaq up by around about 0.6% as well. Joining us now, Seema Shah, Chief Strategist at Principal Global Investors. Seema, you haven't been constructive on this equity market. It's bounced back. What do you make of this move? Is it one you can get behind this time around?
It's not, John. We are still quite negative about the outlook. We think this is you're going to get these kind of moments where there is some positivity in the market. You're going to get these hopes that actually the Federal Reserve, the ECB, the Bank of England, kind of each central bank, that they may not have to go so far, that inflation will fall far quicker than we expect. But the truth is that, look, inflation, yes, it's on the way down, but it's going to move very, very slowly. And we have heard time and time again from central banks around the world, from people that are on the council of each central bank, that they need to raise rates pretty aggressively, and they've got further to go, even if there is an economic slowdown. So we're listening to that message, and we're saying the equity market has got further challenges ahead of them.
But what's the linkage here of bonds to equities? If I'm in equities, I need to reallocate, I need to rebalance, or maybe just the courage to buy the marginal share. What can I take away from bonds?
So at the moment, we have moved to that overweight duration position. We don't see them being particularly a lot of movement in US Treasuries for the time being. We think they're going to be quite range bound because, at least in the US, certainly the recession risk is still a little bit further out. We're still seeing a pretty strong economy. But I think at this point, you can see Treasury yields probably remaining pretty range bound between 3.15, 3.30. But then as you get into Q2, to then start moving down. So this is a decent time, I think, a different level to increase exposure to US Treasuries, especially as we start to prepare for that time where risk assets really start to struggle again.
I look, Seema, at this linkage of bonds and all the economic data, and we're hinged on CPI Tuesday. Is Seema Shah hinged on CPI Tuesday? Is it really that big a deal?
So I don't know if I'm hinged on it, but certainly the CPI Tuesday is an incredibly important number. But if we see, as we are anticipating, that core inflation stays pretty high, around the 6% level is what we're anticipating. And that to us is a green light for the Fed to continue raising 75 basis points at the next meeting. And then obviously not necessarily moving it continuous 75 basis points, but at least to suggest that there is further to go. Now, if we are wrong, and actually you do see core inflation coming down further, then of course it's a pretty different story. And you could see this market rally that we've seen over the last couple of days be a little bit more sustained.
Seema Shah, thank you. Seema, we've got to leave it there. Thank you very much. We're just starting to see some movement here, Tom. Queen Elizabeth's coffin starting to begin the journey from Holyrood House, down the road, down the Royal Mile towards St Giles's Cathedral. Those pictures just coming through from Edinburgh now, Tom.
This is maybe for our viewers and listeners, the house, the castle, the mansion, whatever you want to call it, that's a little less known, John. And it is a house. It is low slung across the fields. The fields behind it are absolutely beautiful. Major change there in the time of Victoria and Edward. But there's an interiorness to this, John. Windsor's out there. Balmoral's out there. This is within Edinburgh, and of course, to move up the hill, the Royal Mile to St Giles is Old Edinburgh.
We told Lisa that following the coffin, moving in a hearse, will be the King, the Princess Royal, the Duke of York, and the Earl of Wessex, following on foot. Other members of the royal family will follow in cars. This is the next stage, the next phase of a sequence of events through this week onto the ceremony next Monday, Lisa, the service. The funeral service for Queen Elizabeth.
The final march to say goodbye to a matriarch, not only of a family, not only to a nation, but honestly to the world, having met with more foreign leaders than anybody else. And we are hearing about anecdotes of people in this community who knew her, because she was there and she would say hi. And so the emotion is palpable in the crowds of people who have assembled.
Tom, this is something we'll continue to follow through this morning onto the service next week.
The Mile is now hugely touristy. I'll be honest, John, the first time I visited, I think I've been twice, I was thunderstruck of how touristy it's become. But the history that is hidden by the tourism of it is substantial. One of the great moments I had with Bloomberg is up the Royal Mile towards St. Giles, an interview that I did for Bloomberg on the porch of Adam Smith's house. That is the level of history that's involved here. It is the only remaining existing residence of Adam Smith, and it's obscure, John. It's not. There's so much history involved here that Adam Smith's only house of 1790 is just an item.
We're about 6 or 7 minutes into this session, Tom. That's something else we'll have to cover as well. Your equity market is positive 0.6%. The Nasdaq of 0.6%. I understand Guy Johnson standing by. Guy, guide us all through the next sequence of events as we work our way through to next Monday.
What you're going to see, John, today is obviously a lot of ceremony. This whole process that is now unfolding in Scotland, leading towards the remembrance service that is ultimately at the other end of the Royal Mile. From where those pictures are now, a royal escort is going to take place. Then you're going to see effectively the King spreading out. So he is going to visit the four corners of the United Kingdom. This is about, in some ways, establishing him as king, but it's also going to be a message that he has already conveyed and will continue to convey about continuity, that he will continue to build on what his mother has done. Now, it starts to get a little bit more complicated as we work our way around the United Kingdom. Clearly, Northern Ireland has a difficult and historic relationship that has always been fraught with the royal family. You need to think about what is happening in Scotland right now. Now, the Scots have made it clear, those that would prefer independence, that even if independence were to occur, the royal family would continue as the royal family. But politics starts to kind of intercede into this process. And it's going to be interesting as well, because the new Prime Minister is also going to be part of that process. There is a concern that already there may have been a blunder by starting to mix the process of politics and royalty. And that could be a very difficult combination.
Guy, there will be an audience in attendance at St. Giles in Edinburgh, and then there is an audience at Westminster Hall. How will London and how will the royal family take on the hundreds of thousands of people estimated to walk by the Queen's coffin?
It'll be a balancing act, Tom. This is a royal family that has evolved significantly over the last few years. It's become more open. The King himself has become more familiar we're dealing with these kinds of situations. We're dealing with the general public. I met him in a small Devon town once with his wife, now the King and the Queen. They were affable and friendly and chatty and interesting. So they've become used to this process. But ultimately, this is still about burying the Queen, burying their mother. So it's going to be a balancing act between those two processes. And there is historical precedent that must be continued. But all of this will happen in a way that has never happened in the past, in the glare of the television lights. And that is how the situation has evolved. We're getting an insight into so much more than we've never seen before.
Guy, this is an unprecedented moment in so many different ways. From your vantage point, there is unity that a lot of people can see of the affection and the feelings of sorrow having to do with Queen Elizabeth II. How is the unanimity, or how united are people about support of the monarchy as a theory?
I don't. There is not a strong Republican movement in this country. If you were to have a vote tomorrow, the monarchy would win every day, and every day. There is no risk there. There's a slightly stronger Republican movement in Scotland, but even there, it's not particularly strong. So I don't think there's no kind of risk to the royalty here. But I think what there is, and we spoke about this a few minutes ago, I think there is a need to evolve the monarchy, evolve who is at the core of that and where the focus is. And that, I think, is going to happen. So Tom asked me in a few minutes ago about the 4 children. 3 of them will become increasingly peripheral, and many royals will become increasingly peripheral. The focus will be on the line of succession. Charles, William, George. That is how the process is going to evolve from here. So that, I think, is going to be a different royal family for a different country.
Guy, there may not be a risk to the monarchy, an immediate risk. Is there a risk to the Union anymore? Much is made about Scotland's push for independence. It seems to many that perhaps that push doesn't have the strength it once did many years ago.
I think it's very hard to say. John, I think this is a situation that is very much in flux. We're going to have elections. We've got elections coming up. I think it's too early to judge how those elections are likely to go. The new Prime Minister has dismissed a call for another referendum, but that may become very difficult to refuse. I think there's a lot in flux here, and clearly Brexit has made that more difficult. We also have a general election coming up in the United Kingdom in 2024, maybe potentially even sooner. That could also be part of this process as well, and a potential catalyst. It'd be interesting to see ultimately how a Labour government would deal with this question, particularly if a coalition was required. So I think there are a lot of moving parts here, John. I think the issue of the solidity of this union has become increasingly fluid.
Guy, thank you. Looking forward to your coverage in around about 18 minutes' time. Guy's going to pick up on the coverage and also going to lead you through the first few hours of the Open stateside, with equities up for a 4th straight session. And I have to say, 4 straight days of gains on the S&P 500. The longest winning streak, Tom, going back to the start of July.
There is a bid on. It is the way, John, the futures have added on through the morning for the most part as a generalization. I'm waiting for a VIX of 22. I don't have it yet. Dow 155 signals to me it's a blue chip morning, and certainly we saw that in Abby's equity report.
Are you going to run away now?
I'm going to run away.
I'm going to catch up with you tomorrow.
We've got a lot going on. For those on radio, the imagery is extraordinary here. And with Guy Johnson, we're very fortunate in the next hour with some...
Policy, politics, From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
Today, what are the biggest challenges for General Dynamics and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights
We think that's the next secular shift.
from businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic. This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live tonight with replays all weekend on Bloomberg Television and Radio.
Yours for the seeking. S&P Global. Seek and prosper.
When you shop at Walmart, you get it. You spend a little less. And you can carry a whole lot more. Flu shots at CVS are pretty. Flex. Schedule one for you or the whole crew. Plus, they're free.
Really?
Healthier is getting a flu shot on your schedule. CVS. Healthier happens together.
Sending you good vibes wherever you are today, Peloton.
30-minute outdoor run done and dusted.
Motivation that moves you. Peloton. 50% of qualified low-income students in the U.S. aren't applying to college.
I'm a first-generation college student. I was one of those kids who didn't know what was out there. So we started College Point to try to solve that.
Bloomberg Philanthropy's College Point program connects qualified students with college advisors virtually.
We can use data to help more students and families make better choices when it comes to college enrollment. We've reached over 80,000 students at this point, which is crazy to me. Crazy. I support continued increases in the FOMC's policy rate, and based on what I know as of today, I support a significant increase at our next meeting on September 20th and 21st to get the policy rate to a setting that is clearly restricting demand.
Governor Waller is ready to go once again on September 21 when the Federal Reserve convenes to raise interest rates and perhaps by 75 basis points. Again, once more, Mike McKee joins us on the latest. Mike, tomorrow's CPI day. It is all about inflation in America.
Absolutely, John. I feel a little bit like Bob Barker, somebody nobody in England would know anything about, and most Americans under the age of maybe 30 would not know either. But he was the host of an American game show in which contestants had to guess the price of goods. Well, that's what economists in the U.S. are doing right now. They are guessing the price of the CPI, where we come in, and it looks like we're going to come in down a little bit on the headline and on a year-over-year basis, which would be seen as good news in the markets. The core unchanged, and the forecast is it rises on a year-over-year basis because of base effects. That's something people are going to be watching closely. But some of the big indicators that go into this have performed well for the month of August. Gasoline prices, of course, down significantly for 3 months in a row. And used car prices, one of the big reasons that inflation went up early on, have tumbled. And so that should help the core a little bit. That leaves us with the Fed probably going 75 anyway, because there are warnings about what will happen if oil prices go back up again. Janet Yellen warning this weekend. Goldman, Morgan Stanley say the price could go into the hundreds. But for right now, it is good news. And so the rest of this week, all about the Benjamins, which is another American expression about $100 bills with Ben Franklin's face on it. CPI and real earnings tomorrow. We get mortgage applications on Wednesday and PPI. Retail sales on Thursday. Are people still spending in the face of inflation? And of course, import prices will tell us something about oil and overall prices. And then Michigan sentiment. That's been a big deal, of course, the last couple of months, because what people think is happening to inflation matters a lot to the Fed, John.
And Mike McKee, thank you, sir. It all translates. It all translates. We all understand. Sri Sankaran joins us now, head of US and European credit at Morgan Stanley. Sri, I'll start with the Lisa Abramovich question, shall I? And then Lisa will no doubt follow up. All of these things that the Fed are trying to lean against, and credit spreads are tightening again. They're not wider. Why?
Yeah, it's a bit of a head scratcher. I think part of the equation here is that credit fundamentals still look okay. So the credit market kind of can withstand a mild recession if it's a technical one. And if we're kind of still solving for earnings growth to be holding up at where the bottom-up consensus is, which we disagree with, I mean, it does feel like credit markets are pricing in some degree of deterioration, but not really a default wave.
Okay, but Sri, I understand that perhaps there's a more constructive backdrop, but the rally in credit's been somewhat significant. It's been pretty impressive considering that people still see recession risk looming large and that people still see the concern with the lockdowns in China, and it's even come with more borrowing, even in the high-yield debt market. Do you think that perhaps people are a little over their skis in their enthusiasm for the instruments?
So, Lisa, I think, yes, short answer is that our view is that directionally spreads are headed wider into year-end. And we do worry more about downgrades and part of the leverage credit complex and so on. But I think coming out of the summer, there's still this bias that investors were positioned defensively. So in some way, it's like the technicals of the market are creating this sharp counter trend move tighter with respect to credit spreads. But agree with your earlier point that, yeah, I mean, it does feel like the market's now underpricing recession risk. And that's kind of why we still have a clear up in quality bias. And we do worry more about fundamental deterioration as we get into the back half of the year and into early next year.
So we're in London right now, and we've been talking all morning about the possibility of nations in the Euro region raising cash through debt markets in order to plug fiscal gaps while they try to support households that are coping with high energy bills. How is that going to play out in the credit world?
Hey, sorry, Lisa, there's some kind of interruption with the audio, but
thinking big from the beginning. I mean, the reason that I was interested in doing this in the first place was a much bigger challenge than making a comfortable shoe or doing something in the fashion industry as a narrow opportunity. We thought that there was a big leadership opportunity. We looked around at an industry where there was 20 billion pairs of sneakers made every single year, and it was 100% made from plastic and the hides from cows, and it was terrible for the environment. And we thought that we could offer something to consumers that was differentiated in the way it feels, more comfortable, higher performance, and do that because we use sustainable materials. And in doing so, we could take a really interesting leadership opportunity and grab that and use that to tell a totally different story and compete on a totally different vector than what the rest of the industry were doing.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
They get them, and we've got to go from one crisis to another.
Are you basically implying that they get what they wanted and they're still complaining? Is that what you're saying?
No, I'm saying they've got what they wanted at a very, very unfortunate moment.
Well, it's
for the wrong reasons, right?
But it shows how it's not necessarily the boon that they thought it was going to be, right? And that's the concern for a lot of people, and why those shares have been so unloved, why people have not been going into bank stocks, because they're not going to do well in an environment where you're not getting the same kind of commercial activity and the same kind of deal making. And that's really the conundrum that's facing the whole financial sector.
They're getting it because inflation is burning really, really hard.
Stagflation.
That's the problem. Final word on CPI tomorrow?
The core is going to be the key. Stripping out the energy costs. We all know what gasoline prices are doing. We could see it on a big billboard when you go past the pump every single day in the United States. The other issue is rents. The other issue is grocery bills. We haven't talked a lot about that, but that's been huge. And that's really been driving prices up quite significantly.
Guy Johnson is going to pick things up from here in about 5 minutes' time. As we've said repeatedly through today, just a momentous week in the history of the United Kingdom, and stunning scenes coming from Edinburgh right now. A seamless transition of power from Queen to King, from mother to son, and a scene showing King Charles III walking behind the hearse, carrying his mother's coffin, heading from Holyrood House to St Giles Cathedral. From London, this is Bloomberg.
To adapt in a changing world, you could hire a professor of theoretical mathematics.
We all know this equation, right?
He'd crunch numbers day and night.
That's it.
To maximize profitability.
Morning.
I have quarterly numbers. They're beautiful.
And forecast revenue from every corner of your organization.
Is that important?
Or you could use Workday, the finance, HR, and planning system that helps CFOs make better decisions faster. For a solve problems like a genius world. Workday, for a changing world.
Most of us don't spend much time thinking about the grid, the dizzyingly huge system of cables, transformers, and outlets that reliably powers our lives. It's an easily ignored, change-resistant part of the modern world, and that's the way we like it. But as we move towards less planet-melting ways of producing electricity, the grid is going to have to evolve too.
We're seeing so many countries and governments announcing high targets when it comes to decarbonization and being climate neutral. But this is just one side of the coin. It's not enough to simply generate green energy. We also need to make sure that this is transmitted and distributed to the end consumers.
The grid of today just isn't equipped for renewables. So a new kind of grid is starting to take shape. The supergrid.
No one covers the world like Bloomberg.
We have to get interest rates higher and bring inflation back to our target.
33 million people have been affected by this flooding in the monsoon.
Disruption is the whole point of a strike.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. However you get your news.
This is Bloomberg Daybreak with links.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Business Week about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines...
Hello, traders. How are you today? We need to move on, and I would like to put stop loss for Bitcoin at 21,123. It will give us 6% in profit equals 6,000 pounds. Okay, guys, so if you followed me, if you copied my trade last week, please place your stop loss at 21,123 and stay with me. We are moving on, not slowly because we were already in very good profit, but surely. Okay, guys, stay safe.
Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance, they say, is to build up pressure on Pepsi. And so you see people marching in the streets. So we had mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning 1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as the coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus. People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of €0, Venegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venegold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance, is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities in the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent
and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation was exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech in right up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price, before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350. Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interest of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are, and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. While that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African-American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. I think education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest blight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor. Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation, a language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
Refer to the dictionary also, okay, and find out the new meanings, as well as you're going to describe about. Hey, Richita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or, a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gaulidoddi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We brought a lot of extracurricular activities, and most of them got institutionalized now. So, for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, the traditional Indian sport. We have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change on that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
Their stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university, and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand, and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park, and inside this greenhouse is a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design